Excellent.
Great. Good afternoon, everyone. We're giving a second for folks to join us, but welcome to this exciting conversation about money in politics and tax policy. And you might think that those are not the most exciting topics in the world, but we are here and ready to make them be exciting. So we're just going to give folks who are joining a couple minutes here to get on board before we start. Right, and we're just giving folks another minute to join us before we get started with our conversation. All right, welcome everyone. Very excited to be working together with Maine Citizens for Clean Elections and the Maine Center for Economic Policy to be presenting this joint webinar discussion about money in politics and tax policy. We have been working with a number of organizations who work on different issues to talk about how money in politics impacts issues from the environment to healthcare, to, as we're going to talk about today, the tax policy and the revenue side of the equation when it comes to Maine politics and the Maine legislature. We're really glad for our partners who have been sharing their work with us and all of their expertise on these issues. If you go to the next slide, I'll introduce you to who's going to be speaking today. So, hi, you probably know I'm Anna Keller. I'm the Executive Director for Maine Citizens for Clean Elections, and I'll be moderating. And with me, we're glad to have Sarah Austin, who is the Tax and Budget Policy Analyst for the Maine Center for Economic Policy, and John Brodigam, who is the Senior Advisor and Counsel for Maine Citizens for Clean Elections, and is also a former legislator. So we're going to look to him for a little bit of his inside knowledge on this as well. So with that, I'm going to turn this over to John, who is going to speak a little bit about some of the research that he and Maine Citizens for Clean Elections have done over the years, looking at the impact of money in politics on tax policy and in particular, the contributions that corporations have made and the tax policies that have impacted corporate policy in Maine. So, John, I will turn it over to you.
Thank you, Anna. Appreciate it. It's good to be here with Sarah, and it's always fun to join these noontime webinars. Really appreciate the opportunity to talk about this important issue. A little bit of background, before I get right into the policy we're talking about. I mean, this year was a year like, a lot of election cycles, but no one really needs more of a reminder than what we've been through in the last 12 months of the importance of remembering that voters really should be the cornerstone, the essential foundation of our democracy rather than money. We saw an unprecedented amount of money in Maine. The Sarah Gideon, Susan Collins race, second most expensive in the country, over probably $200 million by the time it's all over. And voters, despite all the ads, voters remain hungry for a real discussion of policy. And even something as dry as tax policy is something that voters can engage with and have views on, and can appreciate a discussion among candidates. Clean elections helps a lot, but it's always important to look at the unfinished business of this area, and campaign contributions from corporations in trying to affect something like tax policy are one of the things that we will be continuing to shine a light on. This isn't the first time we've looked at this. We did a report a few years ago on the business equipment tax rebate program and how corporate contributions in Maine were affecting that policy, which some people had characterized as an unnecessary tax giveaway towards interests that were already thriving in the state. And we did find a correlation between the money contributed to state legislative candidates and political action committees and the interests that we're trying to preserve and expand the benefit of that business tax rebate program back a handful of days ago, handful of years ago. And Sarah can testify, and I'm sure she will elaborate, that tax policy, it can be even more obscure than budget policy, that there aren't that many people in the State House who understand our tax policy structure, and a lot of tax policy is made outside the legislative session and in the halls of the state office buildings during the entire year, not just from the legislatures in session. And so there are a lot of opportunities for interests that are affected by tax policy to weigh in on that policy. And then the last sort of preliminary comment is that this year, the upcoming legislature will be facing a shortfall of over $1 billion likely. And so tax revenue will be on the table in a more important way than ever before. So this is going to be a timely conversation to have. So I'm going to show a couple of quick slides that some of you have been to some of our other webinars will be familiar with, but this first slide shows overall contributions from all sources to candidates, and they were up 38% in the Senate in 2020, and they were up 30% in the House in 2020. And combined, they added up to over $1 million, just contributions to legislative candidates. And this does not include, of course, clean election candidates. This slide shows.
We can't see your slides. Do you
Oh,
have
can you
screen share?
Oh, I'm sorry. Very sorry. Let me do that.
Great. Thanks.
Okay. And I will, I won't go back to that other one. We'll just go ahead. This shows contributions to candidates in each party or in no party, and how they change this election cycle. You see Democratic contributions are way up, still, but they're still less than the Republicans received. Republicans were slightly down in 2020 from 2018. Green and unenrolled candidates were much lower. And this slide is all source contributions, not just corporate contributions. This slide is just contributions from commercial sources. And it shows, again, the change from 2018 to 2020. It's not a huge change, but the pie charts show that the numbers are down slightly in 2020. Republican candidates received much more in corporate contributions from Democrats, but this is largely an artifact of the fact that they were more likely to choose private funding systems. Democrats more likely to use clean elections. Just a note on reporting, the Ethics Commission relies on self-reporting from candidates for the categorization of these sources. So there's always a handful of anomalies expected into what a volunteer campaign staff person might think is a corporate contribution versus a PAC contribution versus something else. So we rely on that data, but it's imperfect. And this slide shows two special types of highly important political action committees, leadership PACs and caucus PACs. They both raised more in 2020 than in 2018. Caucus PACs raised more corporate money than leadership PACs in both cycles. And as you probably know, clean election candidates are not currently allowed to have a leadership PAC, which is really a PAC that's controlled by one or two legislators in addition to their own campaign fund. A caucus PAC is a PAC that's controlled by an entire partisan political caucus in the legislature. So, primarily there are caucus PACs for the Democrats and the Republicans in the House and the Senate. So there are 4 major PACs each election cycle. This slide focuses in on the commercial source contribution to caucus PACs. And you can see that the Democratic caucus PACs in particular show increasing reliance on corporate commercial contributions between 2018 and 2020. So what do corporate contributions mean for Maine tax policy? There are a variety of ways of influencing tax policy, but the connections and the access and availability that's achieved through campaign support, campaign contributions, is really critically important in a heavily technical and detailed and economic policymaking arena, such as tax policy. This kind of access is, we see this year in and year out over the years from the players that, want to make sure that their particular interest either gets a tax benefit, a tax exclusion of some kind, or at least is not saddled with a tax increase in the policymaking process going forward. And I think it's important to sort of anticipate some of the policy issues that are likely to be coming up in the coming year. And I know Sarah will probably talk more about this. But as we go forward, I think there are probably 3 or 4 main initiatives that we can expect to be debated in the legislature that may have an effect on tax policy and may have a financial effect on these particular contributors to our campaigns. First of all, something that would affect mostly individual income taxpayers, but there's a discussion of increasing a new income tax bracket at the top levels. Maine's top income tax bracket kicks in at a relatively low level, and there are proposals to add another bracket to enhance revenue without increasing the burden on the vast majority of people in the state. Another proposal is to roll back part of the exclusion for estate taxes. Right now it's at $5 million. $5 million of an estate is not subject to Maine's estate tax. That could be rolled back to $1 million, which would still leave most estates, exempt from estate taxation. There's probably $10 million on the table for money that's placed in what's called tax havens, usually out of state entities or accounts or shell companies that where money can be moved in a way that is technically legal but avoids state taxation, and as a policy matter probably should be brought in to state taxation to be equitable and fair with the other companies that are located here. And that's about $10 million that can be estimated could be achieved from going to shut down some of those tax haven opportunities. And then there's also some policy proposals that are likely to come forward on some new ideas around wealth tax and capital gains tax that I expect to be discussed in the taxation committee going forward. So all of these, especially the tax haven question, do touch on corporate interests, which, as I said, is one of our primary policy focuses in the coming year, is the nexus between campaign contributions from corporations and state policy. I just wanted to have a little quote here that's somewhat encouraging, at least from the point of view of those people who think that it's important to have a robust conversation on tax policy. And our incoming speaker, Ryan Fecteau, really opened the door to some substantial changes in tax policy in recent weeks, where he's talked about this concept of creating a new layer of a new reporting level for taxation in Maine's income tax brackets. And he's actually was a sponsor of a bill that would have achieved this. in the last legislative session. So he really just simply said, even in the time of a pandemic, there's people who are doing extremely well and haven't been impacted by the pandemic. And if we need to call on them to lend a hand, they are there, and that opportunity should be strongly considered. So this is that's pretty much what I wanted to share with you. It's very challenging to do a quantitative analysis of contributions affecting tax policy, in just simply because that tax policy affects almost every business in the state and almost every individual. So it's a little bit challenging to do a repeat of what we did with the business equipment tax question back in 2013. It's a little challenging to find those issues that where there's a single corporate interest or other interest that has strong policy preference in state government, and that is also playing in the campaign contribution world. But when we find them, we'll go after them and try to do that analysis. And certainly, when we get to the discussion part of this webinar, we'd be open to any thoughts and suggestions from you all as to the direction our research should take in this area in the future. So I think with that, I'll turn over to Sarah, and then we'll come back and answer some questions.
Thanks, John.
All right, so I have a few slides to share as well, but just to start, I am a policy analyst at the Maine Center for Economic Policy, but I do spend a lot of time lobbying in the taxation committee in the state. So it can speak to this issue of a little bit of what happens inside the building, but also want to share some time in discussion to talk about campaign contributions and what that means for just agenda setting when millions and millions, tens of millions, sometimes hundreds of millions of dollars are being spent for mass communications on policy issues, and taxes are a huge part of that. That also certainly changes the landscape too. But to kick us off, I am going to start first with talking about tax policy in a pretty high level, where we are. Are you able to see my screen, Anna?
Yes, that looks
Perfect. Thank you. So for the past decade or so, we've seen a lot of attention placed on just the huge amount of people in the United States, but also in Maine, that really support progressive taxation, meaning people who have higher amounts of income paying a bigger share to taxes than people who are poorer than them. We've seen a lot of support across the country for a wealth tax, and also just a huge amount of outcry asking for the wealthiest families and corporations to pay more. However, what we've seen in actual policy outcomes is something that is moving in the opposite direction of this. This next slide is, this is from a pretty popular graphic that's made its rounds on the internet from an op-ed column in the New York Times showing what the change in the total federal, state, and local tax code looks like by income level over the past several decades. And starting in 1950, this is the golden age and the rebuilding after the war period, and there's a ton of money going into important public investments in education and building just massive amounts of highways and roads. And our tax code really reflected that. We raised more resources to do that, and also had a structure that asked those who had more to contribute more to all of these structures that help our economy do better overall. And over time, we've seen a huge erosion in this. This chart shows in the 1950s, the richest 400 households paid the highest rate, and in many cases, much higher rates than the majority of Americans in their total tax bill. Fast forward to 2018, and this has more or less turned on its head for the very wealthiest Americans. They are now paying less than everyone else in total state, federal, local taxes. This is income taxes, this is payroll taxes, sales taxes, property taxes, all together. This is what it now looks like, where pretty much there's just like a little bit of variation, and there's a little bit of a bump around the middle, upper middle class folks, and then it ends up going down for the people who have the greatest capacity to contribute to the things that we all need. So this is just a thing that I think about a lot. We have public opinion in one place, and then we have policy outcomes in a very different place. And I think this really is influenced by who is able to help in the policymaking process. And part of this is access and relationships, but it's also being able to afford the kind of expertise to comment on something as complicated as tax policy for the ultra wealthy that have a lot more than just their salary or wages, and have a lot of investment incomes, property incomes, a lot of just different kinds of, they just play in a lot of different areas of the tax code that aren't known to regular people. The flip side of this, though, are all of the things that taxes pay for that everyone really does have a stake in. Things like roads, but also just really quality education, not just for, you know, just in the classical sense of that, but also making sure that children with special needs like actually have quality education too. Whenever we say quality education, we mean that for everyone. That is the other side of taxes, and there's a lot of issue knowledge there in terms of what it takes to build that often isn't even discussed in a taxation committee or in a discussion about tax policy. So a part of this is just the structure of the legislature. Those are separate committees. But the ability for campaign contributions on advertising to be able to talk about taxes in a vacuum outside of a conversation about what they pay for, I think has been a huge piece of making that part of the debate landscape. And this is a national chart. We have Maine folks on the line, so I wanted to make sure that we're also showing what we are working with in our state and local tax code. This is a few years out of date on the actual incomes that were run through the model, but the tax code is all correct here. There's a little bit of lag in income data, things you don't need to know. But the spread here is similar. We aren't able to break out the richest 400 families in America in Maine because we don't have access to that data, but we do have the top 1% here. And in Maine, they are paying a lower state and local tax share than all but the bottom poorest 40% of families. So while this isn't quite as extreme as some other states, this is still not the progressive tax code that people have been saying in poll after poll that they do believe in. And we are still quite a bit away from what a progressive tax code looks like. So if we are looking at policies that really target this top 5% or so, there's real revenue there to be had. To turn this into a progressive tax system, you could raise a few $100 million a year. If you make those adjustments to get this looking not quite what it looked like in the 1950s, but in a more progressive structure, there are very real resources that we could then plow back into communities, into education, into making sure that the care staff across the state are actually paid a fair wage. But the dynamics of that policy discussion are just so off balance. Because the way to do that are these really complicated discussions about things like tax havens, where you have to understand all of the ways that corporations are able to hide their profits, and then all of the complicated ways that you have to go about plugging those holes. Someone with a special needs child has a lot of policy knowledge, and to expect them to then master international corporate tax policy to come and testify on a bill that we've now found one that can raise $40 million, which is a little more than that 10 million one that we had been working with. That $40 million could really do a lot of good for something like ramping up special education in the state. But the ability to actually engage with that tax conversation in a way that, first of all, getting off work and then getting to the legislature and then knowing enough to be able to feel confident testifying on that in favor of revenue for a program that has nothing to do with taxes is just a very different discussion than a corporation that has been able to pay a lobbyist to be in the legislature every single day of the session to develop relationships with the legislators that are going to vote on this. So that is just like an example of kind of how this maps out. Oftentimes in the taxation committee, there are a dozen or so lobbyists there asking for tax cuts or lobbying against tax increases in the state that affect wealthy people and corporations. And then it might be me and maybe a representative from education interests lobbying against that. So that is one of the ways. And then also I just can't, I look forward to the discussion about broader campaign contributions on advertising and that ability to really set the agenda on taxes and narrow it into a much less nuanced discussion, which it often is. So I will stop there and turn it over to Anna.
Thanks, Sarah. This is great. It's really helpful to be able to see these overviews. We can get, as you were saying, we can get so easily lost in the weeds of a particular policy and the arguments that are being put up around it and lose track of the overall questions of we're raising money in order to spend it on the priorities that the voters think are important, and that this is the our common set of resources to use. I was hoping that you could touch a little bit on what some of the different sources of revenue are for Maine. And I don't expect you to have the exact numbers at your fingertips, but if you could give us just sort of a sense around, income tax, sales tax, what other sort of taxes on corporations in the state, just sort of what are the different tools at the state's disposal when it comes to raising revenue?
I feel a little underestimated. I can actually share a slide with that now.
Oh.
So I
should have known you'd have all of this at your fingertips. Beautiful.
Yeah, so this is a picture of Bean's general fund, which is more or less like this is where we go for discretionary, like big education, healthcare funding. This is the fund that does that. This is usually what we're talking about when we talk about the budget. And individual income taxes are about 45% of that. And then sales taxes are 38%. Corporate income taxes in Maine are only 5% of all of our revenues. Some of that is driven by the fact that Maine has very few businesses that are actually registered as corporations. A lot of them pay through the individual income tax as a pass-through business. So it's not to say that this is the only business revenue that we have in the state, but it is still pretty small that corporate taxes are only 5%. And then there are just some other excise taxes and other fees that kind of make up that other part. But overall, income taxes and sales taxes are the major sources. And just to get the understanding here of how that affects people differently is that income taxes are very progressive and that we have a graduated rate that increases as people make more money. And then sales taxes are very regressive, the opposite of progressive. And the bottom 20% of families pay about 9 times more in sales tax than the top 1%. So they are just the mirror opposite of what income taxes look like in terms of who pays them.
That's really dramatic. And just in the sense of the scale, how does Maine's corporate tax rate compare with other states? Are we sort of in an average bracket, or are we particularly high or particularly low?
That is a good question. So the tax rate in Maine is higher than a lot of states, but with corporate taxes, because there are so many deductions and just different exemptions, and what even is called taxable is so variable state to state. Even though Maine's tax rate is higher than a lot of states, our corporate tax incidence is lower than many in terms of what they end up paying. So that's very confusing. But there are some state by state comparisons that even though our top rate is high, businesses in the state actually pay a lot less in corporate taxes than some other states.
And I'm assuming that this is actually a question that we had gotten in the chat, which was just shows that sometimes we're all thinking along the same lines. And as would increasing the tax rate disincentivize businesses from locating in Maine? Has there been research looking at that question?
That is a great question. And the corporate tax in Maine is really, for the most part, corporations that are not even headquartered here. So these are Walmarts and Targets paying corporate income taxes on the sales that they do in the state. So they are here because their customers are here. They are not here because of tax policy. And that the change in corporate taxes over the past few years has really, many states have gone to this model where the taxes paid in the state is based on just the sales in the state. And there's some pros and cons to that, but I think for the most part, it's it really helps with these arguments about rates. And it's also important to know that these are taxes on profits. They are not taxes on anything but that. It being that it's profits, that means that there is an ability to pay there. It's not something like income where you aren't sure if that is something that is needed to cover a house payment or not. Like you know that these are profits, they are outside of any expenses that the business is already having.
Great, thank you so much. That's really helpful. I wanted to ask John, and then if there's more that you want to fill in with this, Sarah, definitely feel free. When you're looking at, as a legislature, at building a budget, at what point does the average legislature think about the balance of raising revenue versus sort of appropriations and what is going to go into the budget and be spent on? Thinking about some of the bills that we've worked on together and some of the issues that often come up around, well, if this is going to have any cost to it, it's going to be much harder to get it through. And it starts to feel a little like it's out of our hands once it's in that part of the process. We seldom talk about like where the revenue for it might come from. But could you speak a little bit to sort of what goes into the process of making a budget and deciding which things get some of that revenue?
Yeah, it's a really interesting process. Good question. And you remember a few years ago when we had a budget that didn't get agreed upon, and there was a state shutdown at the very end, and it went into July and disrupted a lot of people's lives and a lot of state services for quite a while because of a failure in that process. But just as an overview, I mean, the state government does a constant repeated revenue forecasting periodically. There's a commission that projects with existing law, what the revenue is going to be coming into the state on the chart that Sarah just described a few minutes ago. And so that process is going on, and it takes account of the economy and changes in state and federal law and so on. And then actually right about at this time of the year, the spending side starts to come together, where the governor pulls together state agency projections, asks each agency to project what their spending needs are going to be. And that will reflect a continuation of their programs plus any changes within their scope of their mission. And then the governor typically adjusts those projections and adds her own increases or initiatives or other programs or maybe cuts in programs or additions in revenue when she pulls together the whole budget as a unified proposal, which is submitted usually in January. And that starts the discussion. That's the discussion point. And oftentimes the legislature will form its own parallel process to present its budget, which is kind of based on what the governor is projecting, but might have different priorities. So this process goes on throughout the first session of the legislature, each odd numbered year, really starting as soon as the legislators are in place and continuing often until the very, very end of the legislative session. And so throughout that process, the taxation committee is looking at revenue sources. And of course, under Maine Constitution, the budget has to be balanced. It has to end up, revenues have to match expected expenditures. And then during the 2-year biennium, the legislature comes back periodically and adjusts the budget with what we call supplemental budgets, where additional revenue might be needed or spending might be available as a result of things that have happened since the maybe 6 months or 12 months since the original budget was put into place over the 2-year biennium. So the long answer is that the tax question is on the table constantly. Legislators can weigh in with tax proposals either at the taxation committee or in the process of having sort of higher level discussions with the executive branch over the shape of the budget itself. In a case where the legislature and the executive are controlled by the same political party, there's probably more of those high level conversations that happen than in the case where they're not, when it really it's just fought out in the appropriations committee and the taxation committee for the most part. There will be public hearings on specific proposals. The ones that Sarah and I discussed in terms of closing off those offshore tax havens, that will be included in a bill that could either be part of the governor's budget and have a specific hearing in the appropriations committee or the taxation committee as part of the budget process, or it could be introduced by an individual legislator who might want to just put that bill into the taxation committee where the public can weigh in on the value of that. And of course, lobbyists and the people affected could weigh in as well. And the same with any other proposal to change our revenue structure. The taxation committee meets constantly throughout the session, and there's plenty of opportunity for public input. So that's it's kind of an overview of the process.
Great, thanks. And I just wanted to remind our audience that you can submit questions into the Q&A tab at the bottom of your screen, and we're hoping to get to some of your great questions in a second. I just wanted to ask our panelists one more thing sort of about the politics of tax policy. And when we're looking at these issues that are going to come up in this next legislative session, things like tax havens or raising the top income bracket. Did you see those come up during the campaign cycle? Were candidates either running on those, for or against those policies, or did you see independent expenditures happening in with some of those outside advertisements in those races? I'm curious, and this actually goes to a question that Tom asked, so I'll try to roll that in here too, but when there's this divide between the population as a whole supporting the more progressive tax system, but often voting for candidates that don't act on those views, is there something that's being done wrong in terms of messaging, or what is the disconnect between some of that public opinion and then how the votes are cast? And I could imagine a bunch of different things might fall into that, but I'm curious what you saw watching this last legislative election, whether these issues were coming up during the campaign cycles. And either of you wants to jump in first. Sarah, you were mentioning ads earlier, so you have more to say.
Yeah. So I think I can be fairly brief because this is not my area of expertise. But I think it is very notable that Joe Biden ran on the most progressive tax proposal we've ever seen from a president, and won, and was seen as a pretty moderate candidate in a lot of ways. So I think there is a weird thing that happens when oftentimes it is the Republican Party and other PACs that support them that are putting out these anti-tax messages. And the thing is, they do it every single election. So it's really easy to take as a lesson from any lost election that that's why a candidate lost. Just because it eats up all of the oxygen in the room is taken up by that. And then whenever someone goes to analyze what happened in this campaign, it's very easy to say that that is why it was lost. We also saw that Sarah Gideon didn't quite win against Susan Collins, but taxes were very central to that. And Sarah Gideon did talk about things like the estate tax and repealing the Trump tax cuts for the wealthiest. And got closer than any candidate ever has against Susan Collins. So there are examples in both directions, I think. And it's the important thing to know is that people do care about taxes being fair, and they also care about funding things that really matter to them and their communities. And to be able to do the funding part, you have to talk about taxes to be able to deliver on any promises that are related to funding. So this is less about like campaign knowledge and more about just there are some practicalities to having a policy platform, and just would caution anyone from feeling like the answer is always that people don't like taxes. There are just a lot of reasons that candidates are different and races are won and lost. That may be the case sometimes, but not necessarily all the time. But John might have smarter things.
Well, see, I think I agree with everything Sarah said. I say that the Democrats seem to have staked out a position that's sort of like this. We'll set this level that's much higher than what you earn, right? Whoever you are, we'll set this level, and only people above that level have to worry about. We definitely need more revenue, but it's only going to be people above that level, the super rich, the 1%. And that's kind of orthodoxy for the Democrats, I think. And we can talk about, or they can talk about where that level is exactly, or whether it's state or federal. On the Republican side, I think it used to be more common that on the Republican side that there would be that level would be set, and above that level, we would say those are the Republicans would say those are job creators. You're taxing job creators, and you're going to hurt the economy. I don't hear that as much anymore. I think there is perhaps more openness to revenue above a certain level, and more of the trend in the last maybe 4 years has been towards openness towards revenue from the very high levels. And of course, I think on the Republican side there would be who knows whether their level that they would set would match the Democrats' orthodoxy. But I do think there has been a little bit of movement on the across the board on the need for revenue, because the information that Sarah presented in that graphic about the downward trend in the actual tax burden on different deciles of the population, that's sinking in, and people are not happy about it. People are angry about it. And I think everybody in politics recognizes that.
Great, thanks. I'm going to take a couple of our audience questions here, and I really appreciate the thoughtful questions that folks have been raising here. one piece, and I'm going to try to read this out here, but the vast majority of Maine businesses are S corps, where their income and retained earnings are taxed as personal income. This is something Sarah raised earlier. And so since that is both the working capital for capital expenditures and expansion planning for the businesses, but it's counted as personal income, how do you think that, well, I'm just reading that part, and I will kind of summarize now just to say that, to ask, how do you think those type of businesses can be equitably taxed in a way that supports their, their economic success and raises revenue for the state? Where do they fit in within the picture that we've been discussing?
That is a good question. I know it's just, there are a lot of accountants that have great answers. There are ways to just structure a business differently, and we've definitely seen this in the past several decades in businesses moving more towards debt financing. Debt is pretty cheap right now in terms of interest rates. They have been low for a while, probably will be for quite a while more. And there's just been a big shift in business financing towards doing debt financing, where you can go ahead and get things and then write off your debt and get more of a tax benefit without having to be saving and holding capital investment funds that are going to be taxed year to year. And then we also just know that a lot of businesses end up making those purchases at the end of the year too. So this, to me, it's much more of an accounting issue than it is a tax issue. Pass-through businesses are already getting a tax benefit by only being taxed once rather than being taxed in a corporate and individual income environment. Those funds would still be taxed at the corporate rate if you were a corporation. So it's a bit of a hairy, complicated issue, but it's really one that plenty of businesses have found workarounds for, and part of this is just the function of where we've moved much more into a debt economy.
Thank you for taking a stab at that. I'm not an economist, and I actually understood, or an accountant, and I actually understood what you just said. So I really appreciate that clear explanation. We had a question that I think I'd love to have both of you weigh in on, which is just how can ordinary citizens compete with the lobbyists when it comes to weighing in on these processes and putting their interests in front of the legislature? What advice would you give?
Well, when I was in the legislature, I occasionally had people come to me and say, I support, having good schools and good education opportunities for all the students in the state. And if it means that my taxes are going to have to pay for that, then so be it. And I think that this is a conversation that is open for everybody, and not just the people who, necessarily have a child in school, and not just the people who are adamantly opposed to any tax increase. I think these are all public decisions that show our values as a society. And I would add that tax policy is not just about how much revenue we bring in, but it's also about, it can have the effect of encouraging or discouraging certain kinds of economic activity that we want or don't want in the state. And so it's a complicated picture, and it takes a fair amount of self-education to be able to confidently talk about this, maybe with a member of the taxation committee. But these are public values, and everybody has a right to weigh in. And I always appreciated it when people talked to me about this when I was in the legislature.
Yeah, something that you said, John, is something that's been clicking for me a little more, is that any time someone is advocating for something that needs funding, it's important for them to like add the end of the sentence to legislators, which is like, it's okay if you raise taxes if that's what it takes to do this. And unfortunately that like doesn't always get said out loud, and legislators like really feel like people want education, but they don't want to pay for it. And they feel like they are stuck in this hard spot. So making sure that the advocacy is smart in that way, and that it's talking about both sides of the budget at the same time, so that legislators aren't confused, is very important. And it really does, I mean, we live in Maine, and it's awesome that 5 people calling a legislator really can make a difference. So just really still going through the effort of calling the legislature, I think is a worthy cause. We still have a lot of really good democratic values in Maine in that way.
I like Dale's comment in the chat that taxes are a group discount, and you know, the other adage that you hear is that, you know, taxes are the price of admission to a civilized society. Everything that we do together collectively, you know, we just went through a very expensive election process, and you don't want that election to be paid for by, you know, corporations or special interests or people of offshore tax havens. You want that election to be paid for democratically, and that's what we have to do with our taxes, and collectively it's a great benefit to us to have a good, reliable, credible election system that's paid for by the public. So people need to remind their elected officials how important those kinds of common goals are for them. And I think elected officials will strike the right balance at the end of the day.
Is campaign spending in Maine as ideological as it is at the federal level? Or do we see contributions to politicians in leadership positions sort of regardless of their ideology or party? Is that a trend that we notice with business donations, or are the businesses that are donating ones that also have a more partisan trend?
Well, I'll take that one. I think my shorthand would be that contributions directly to candidates are more sort of bipartisan or nonpartisan. I mean, you'll have contributors that'll give to both sides of a campaign, and they just want to, you know, they're just playing the game, and they want to have access to either side after the election. The independent expenditures, I think, are far more ideological. Those groups that are taking out expensive ads to try to tip one Senate race, or maybe the whole Senate as a body, or maybe even the whole legislature, to tip it in one direction or another. I think you often see more ideological money going into those independent expenditures. That's been my assessment in recent election cycles.
I've got 5 minutes left, so we're gonna move into wrapping up, and I really appreciate, and again, all of the questions. I'm sorry we haven't gotten to any of them. If we've gotten to all of them, did get to many of them. And we're going to talk a little bit about some of the next steps around this work and how you can find out more. And I'll also give an opportunity for our panelists if there's anything else that you want to add that we haven't covered yet. But I believe that Will has a last slide, so I'm going to hand it back to him to put that up here. Awesome. So I will just start by saying, if you are interested in talking more about the corporate contribution side of this and what we can be doing to equal the access of ordinary Mainers with the corporations and their lobbyists in this process, Maine Citizens for Clean Elections is working on a bill for the coming session to ban corporate contributions to candidates and their PACs. So that this is something that a ban that exists at the federal level and in 22 other states, but Maine doesn't have it. So if you're interested in that, you can go to mainecleanelections.org/corporate, and you can sign our petition. You can see more of our graphs about that and find out about how to get involved with this effort in the coming legislative session. Sarah, for folks who want to learn more about the policies that MECEP's working on or tax policy, what's coming up for you all next and how can people get involved?
Yeah, I'm gonna just share our website in the chat here. I want to plug for the other analysts that we have. Jane Smile just finished a really excellent report on the state of working Maine this year that focused on racial equity in the workplace in Maine, which is really exciting and adds a lot to this conversation. We're stepping into a legislature where we know that this is going to be one of the priority issues, is really finding solutions on racial equity in the state. And I think this is a really awesome way to start that conversation with a lot of data. So there's that. I am also working on a report that is going to be out early in the year, just looking at a lot of different options for raising revenue in the state. So that is on the way, but not quite wrapped yet. And definitely look forward to more of this conversation on corporate contributions in the tax code too.
Great. Thank you so much, Sarah. We really appreciate just all of the excellent work that you do and that MECEP does, and bringing the very complicated topics into ways that we can use them in our everyday lives. Jan just asked if the graphics from the presentation are available. The ones from John's presentation are available at mainecleanelections.org/corporate, and we will put that link in an email to everyone who attended today. And Sarah, do you have your things accessible, or could we share that with folks after the fact?
Yeah, we could email it to the attendee list.
Great. And this webinar is recorded, and we will put it up on the Maine Clean Elections website after this, and so that'll be accessible if you want to share it with folks or go back to it after the fact. We are going to be continuing this series in the new year, looking at some other issues that are coming up in the legislature and how they're related to corporate contributions, and looking forward to talking with you all then.
Thanks.
Thank you.
Thanks, folks.
See ya.